Okay, Mr. Bracknell says that it is 5:30. Mr. Wallace, if you will step up here, please, sir. Raise your right hand. Repeat after me. I, Thomas Wallace,
I, Thomas Wallace,
do solemnly affirm
do solemnly affirm
that I will faithfully perform the duties
I will faithfully perform the duties
of City Council
of City Councilman
of the City of Temple,
of the City of Temple,
and that I will support and defend the Charter thereof
and I will support and defend the Charter thereof
and as the Constitution and laws of the State of Georgia
and as the Constitution and the laws of the State of Georgia
and of the United States.
and of the United States of America.
Congratulations, sir. If you will sign this, Mr. Wallace, and give that to Kristen, she will make you a copy of it. And like I say, congratulations. We have taken care of item number 1. Don't see Mrs. Benson here yet. So, Mr. Osborne, tell us about the resolution after she presents the audit. We'll be that far gone.
Yes, sir, Mr. Mayor. If I could get the members of council attached to your agenda, you will find a one-page resolution entitled Resolution to Acknowledge and Accept the 2016 Fiscal Year Audit for the City of Temple. This resolution is identical to the one that we had at this time last year when you were looking at the 2015 fiscal year audit. And just to point out to you that you already know that tonight the audit presentation that will be made by Robin Denson from the CPA firm of Warren Everett is that your action is not to say that you approve or you reject what's in the audit. The audit is what the audit is. Basically, your action is simply to acknowledge and accept the receipt of the audit, and that which will be transmitted tomorrow to the Georgia Department of Audits and Accounts of the state of Georgia. I would point out that I got a telephone call from Ms. Denson about an hour and 15 minutes ago that she was on her way, given traffic in Atlanta with the rain. She's obviously running a little late. I assume that she will be here momentarily. Mr. Mayor, if you want to, I can go ahead and read the resolution so we get that part out of the way.
Well, don't anybody got any objections in reading this? Go ahead, sir.
I just have one question. I don't recall that second paragraph where it says that we're accepting this without commenting on the content of the audit. So if there's a glaring, obvious mistake, we're not allowed to comment on that mistake in the audit. We just accept it with the mistake.
Say that again.
Whereas through the adoption, the mayor and council without commenting on the content of this said fiscal 2016 audit. I just don't recall reading that before.
That was in there last year, and
Maybe it's because after we had discussed it, I don't know. That's now we did ask questions during the last presentation.
right. I mean, this is not to say that that you would not make comments, but basically your receipt of the audit is simply receiving the document that they prepare. I'll read the resolution. It says, whereas the City of Temple has a contract with the CPA firm of Warren Everett, CPAs and advisors to conduct an audit of the city's revenues and expenditures for fiscal year 2016, and whereas representatives of the firm of Warren Everett notified the City of Temple that the audit for fiscal year 2016 had been completed and that said firm was ready to make a report to the mayor and City Council prior to submitting the audit to the Georgia Department of Audits and Accounts as required by Georgia law, And whereas the presentation to the mayor and members of the city council was made during a special call meeting at 5:30 p.m. Thursday, June 29, 2017, and whereas we have determined the scope of the audit presented to us during the special call meeting is in accordance with the scope of the city's contract with the CPA firm, and we believe said scope to be responsive to the audit requirements of the state of Georgia. And whereas through adoption of this resolution, the mayor and city council of Temple, without commenting on the content of said fiscal 2016 audit, wish to acknowledge and to accept the fiscal 2016 audit as presented by the firm of Warren Average CPAs and Advisors. Now therefore be it resolved by the Temple Mayor and City Council that we appreciate the work done on the contract by the firm of Warren Average. We acknowledge and accept said audit, and we agree the firm should transmit this audit to the Georgia Department of Audits and Accounts, nonprofit and local government audits as soon as possible. In witness whereof this resolution has been duly adopted by the mayor and council of the city of Temple, Georgia on the blank day of June 2017. Will show the mayor's signature attested to by the city clerk, and we will come back action on this after the presentation of the audit. Mr. Mayor, if you like, I can go see if I can get this next one phone and get an idea of it.
See where she might be.
sir.
Did you have her email or not? To her phone?
That's what Sarah was looking at. Trying to get into that.
waiting on you, dear, so the floor is yours. You are on.
Billy is in now, so I'm gonna get started on part of it. And then we'll go from there. There are two letters and
Yield the chair.
please. Yeah, I sent one that way, and then one yours. So let's see which one I got. This. So you have that one, and then the one that's coming around. How are you this afternoon? Extras. Okay, so you should have 3 different documents there.
I got 2.
So you need that letter. Coming back to duplicate letter, so you need this one. Yeah, you're good. Let's see the first page. Those letters, right? And everybody's got the large financial package, right?
Right.
And Mr. Rockwell's not joining us, right? So Mr. Audit Partner is going to be joining us momentarily, and he'll go through the financials. I'm going to get started on the letters so that we can get this moving just a little bit. In the letters, you've got one that's a 2-page letter. Let's start with that one. So this is our 260 letter, which the letter charged to those with governance. Basically, the essence of this letter is just like it has been in the past. It gets down to the point of anything that we found in the audit, if we encountered any difficulties with management, which of course we did not, if there were any corrected or uncorrected misstatements, disagreements with management, things of that nature. This is just a formality, to be perfectly honest. Not a whole lot of information in here that's really applicable to what you all would need from a governance perspective. With that, I'm going to go ahead and jump to the second letter. This is always a letter that's of most interest to you all and the one we spend the most time on. We refer to this as a 265 letter or a management letter. If you jump over, actually let's start on the first page. So we've got down at the bottom of page 1 where we talk about material weaknesses and significant deficiencies. So in the past we have had a material weakness that continues in the current year. We'll talk about that momentarily. In the current year we also have 2 significant deficiencies, which is an improvement over the last year. We had 3. So we do have some movement in the right direction that we'll talk about a little bit more closely. And then as it mentions below that, other observations and recommendations in Exhibit 3. So we will go ahead and jump straight over to the third page, which is Exhibit 1. And this is what we've identified as your deficiency that's considered to be a material weakness. We have beat this one to death. Everybody's pretty familiar with the utility billing situation. Keep in mind, when we're looking at this audit, we are auditing 12/31/16. And I know a lot has happened since 12/31/16 when it comes to utility billing. But when we're looking at the period that's under audit, you are still under TBS. So all of the same findings that we've had in the past still apply during the year. As a matter of fact, there were even some things that came up during the year with some meter reading and things like that that had to be adjusted. I would say probably fall, if I recall correctly, that was a part of this material weakness that was identified. As I'm sure Sarah and Mr. Osborne have discussed, the move to Cassell will the assumption is that the move to Cassell is going to eliminate many of these problems. Now granted, I'm not in the system, so I haven't seen it firsthand, but I truly believe that when you see us this time next year, that Cassell is going to have saved the day and hopefully remove this material weakness off of the management letter. So nothing, absolutely nothing new with that. That was exactly from the prior year. In Exhibit 2, internal control deficiencies considered to be significant deficiencies. We have 2 listed here, controls over amounts reported in the financial statements. I will say that this has to do with entries that are made on a monthly and or annual basis that need to be done in order for management to be using financial statements as appropriate throughout the year and then at year end. We did have some journal entries that did need to be made as a part of the audit. However, they were drastically reduced from the prior year. So we, again, significant improvements in that area. So I fully believe if things keep moving in the general direction that we saw in this audit, that that's going to be a non-issue in the coming year. The third one listed there is limitations of your current accounting system. Of course, like I say, this is referring to TVS. We all know what the limitations of that was. And so this is just kind of a regurgitation of what we've seen in the prior years. One thing that you don't see here is we had a significant deficiency listed last year for bank reconciliations. And that is something that Sarah has diligently worked on getting handled on a month-to-month basis so that management is using current information for managing the city. So that was nice to be able to take that off of the management letter. Exhibit 3. So these are our other observations and recommendations. I felt it significantly important to move the bond compliance recommendation up to the top. I mentioned this to Mr. Osborne in some conversations in finalizing the audit and things of that nature. You'll see here that, you know, you've talked about it ad nauseum at this point at 1.05 compliance. This year we're at a 0.66 after all of the audit entries and things like that. So it is an improvement over the prior year. However, and you'll see this when we get into discussing the financial statements, some of that improvement comes from the fact that we were able to do a SPLOST transfer in 2016 to provide some extra cushion in that calculation. Like I say, we'll talk about that a little bit more when we get into the financial statements. So with that balloon payment slowly but surely coming up on us, it's something that needs to be looked at carefully. And I know from a review of your minutes that there's some studies going on and things like that nature, but moving forward on that is going to be of utmost importance. Number 5, journal entry approval. So this is nothing new. You saw this in our letter from the prior year. Sarah is entering as well as essentially approving her own journal entries. It's just a function of the fact that you've got a one-man show for the most part. So I know that with the intergovernmental agreement, we were hoping to kind of spread that around with some people doing preparation and Sarah doing review and approval process. With that now potentially going away, that's something to definitely keep on the forefront of your mind is how you're going to be able to allow for review and approval at a different level than the person that's actually doing it. So something to keep in mind there. Documentation of internal controls and accounting policies, number 6. So I know that there's been talk of getting some accounting policies and procedures in place, but as of the audit, the year under audit that we're talking about now, that's not there. My assumption would be that with the implementation of Cassell, that could probably be a bit of a streamlined process, because now it's a new system, so you've already had to kind of figure out what it is. It's just a matter of getting it down on paper as far as that looks. With the termination of the intergovernmental agreement that's coming up on us, that would be something that you definitely want to take into consideration in properly training whoever's going to be taking over responsibility of that function. Number 7, risk assessment. Again, this is not a new recommendation. Risk assessment both at the council level as well as the management level to identify where your areas of concern might be, and then documenting it in a formal manner as far as how to mitigate those. With the change that's coming from that intergovernmental agreement going away, again, things of this nature are going to be of utmost importance because you start getting into additional what's called segregation of duty issues and things of that nature. So risk assessment, both management can assess it and then bring it to the council for consideration and further review. And then the council, of course, take a look at it, see if there's any recommendations and things like that that they would make. But if and when that takes place, making sure that that's documented as part of your council minutes will be important. Number 8, conflict of interest and related party policies. This is a function of just understanding the relationships between vendors and things of that nature for disclosure purposes of the audit, and just for your own information in terms of dealing with closed bids and all of that. So implementing a formal conflict of interest and related party policy would be beneficial. Now, something that we see normally is that this happens on an annual basis. You know, at the first meeting of the next year, that's kind of distributed for signatures for people to disclose what those parties might be, and then turn that in as part of the official minutes of the meeting. Then when we come in for the review for the audit, we'll look at that to see if there's anything that needs to be disclosed within the financial statements of the audit. I do have 2 new comments, number 9 and number 10. Number 9 is kind of it's an adjustment of a prior year comment. In the past, we talked about fixed assets and things of that nature, but this one is more of we've taken a look at fixed assets. We're doing a good job of keeping up with assets as they're purchased and things like that. But now, let's go back and see, do we have anything that's in our list that's no longer being used, or that's been disposed of that we just hadn't identified that's been disposed of, and things of that nature. So you've got some things that are probably sitting on your books at what we call a net book value of 0. So it really has no financial statement impact, but that having a current list that we know is true will be helpful in doing your year-end close, helpful with whoever is closing your books at doing year-end close to make those adjustments. A prime example I actually saw when I was doing a review of your minutes in the current year was that, we were talking about disposal of two trailers. And I did not go back into my work papers to see if I could quickly identify where those are on that list, but that would be something that we'd want to be able to quickly identify on the list and get that off of there as part of that. So you're talking about one side of the transaction, and then Sarah's going to want to know about the other side of that transaction. The other item here, 2016-10, relates to prior to when we began the audit. There were some billing issues that came up where there were some funds due back to utility customers, and it's been sitting on the books. Now this will be our 3rd year that it's been there with not much that's going on with it. It's there, at least it's on the books and it's recorded as a liability. However, it may be time to consider what action is going to be taken on that to handle those accounts that are still sitting there.
So you mean to pay the customers back again
after adjust billings based on that. There probably needs to be some sort of a discussion for there to be some sort of action.
It actually happens to be on the agenda for the July 6th meeting.
Fantastic. Okay. Does anybody have any questions on that? You know, a lot of it's a regurgitation of prior things that just haven't been able to be fixed until the implementation of Cassell.
On the fixed asset part, that has been a problem. It was something that we actually, Sarah, addressed even within the forensic audit, because I think a lot of that was being kept outside of the city's operating system. Did any of that get matched back in yet to make that
It's
easier?
all back in the books now. We just need to go through and clean up everything that's old or gone.
Because before it wasn't even kept inside the same.
That was, we,
Okay. I was wondering if that was like a draft 2 years ago. so-
Year one was a challenge for both of us from an audit perspective to get that information loaded in and both of us to a point that we were happy with the information that was available. So now that it's there and we continue to make improvements in that regard as far as checking with, Sarah checks in with departments at least annually to see if there's anything that they identify that needs to go away, but there's not really been a formal inventory taken of what's actually there, as opposed to just a question, you know, will you update this? So doing some sort of formal fixed asset inventory would be beneficial.
Okay, and then the other question I had is when you were talking about the finding with the bond. Bonds, where was that?
It's the first one on it in Exhibit 3. So it's not what we include in our report as a weakness, but I thought that it would be significantly more important to talk about. So Exhibit 3, page 1. Two more pages. First one. Yep.
Okay. And I guess this is going to get back to the question that I'm going to have here too, but when you talk about this bond compliance here, and that was offset by the transfer here. So where was that transfer recorded? Was it recorded as in the water and sewer fund, or was it recorded within the debt service?
So the water sewer hold your debt service, essentially. So that's a transfer out of your SPOS and into the water sewer fund.
Okay, so then my next question would be the debt that's been carried over here for years, the $700,000 or some debt, what page is that debt shown in the audit? $7,000 a debt. It's been in every audit. It's been what's been carried over for water payments that were paid by the general fund. So every year the audit kind of shows
So that ends up
debt.
that transfer ends up being put directly to that in what's called an interfund payable.
Right, except that was for employee salaries. It wasn't for debt service. That was using SPLOST money to pay for salaries. And you can't use SPLOST money to pay for salaries.
No, the transfer was posted to the wrong bank account. So we knew and we set up the liability. The liability offset, like she said, the revenue that, the receivable that had been in there for the salaries. But balance sheet accounts, that doesn't, the receivable, the liability, those are balance sheet accounts. We're more worried about what the expense is, and the expense was for the debt. So the transfer was posted to the correct, the revenue was captured in the right fund, but because the cash went to the wrong place, it's set up as a receivable from the other cash account.
Right, but I guess my question is that wasn't, the ballot issue was to pay, I mean, the way it's worded on the ballot is to pay debt service. That's SPLOST money can only be used to pay debt service if needed, not to pay day-to-day expenses, which that debt was for day-to-day salaries that were owed between the water fund, because the general fund was paying the water salary for years, and that's what made the debt compliance look so good, because they were not really paying for a single salary in that water fund. And whenever, and the reason I brought this back up last year and again this year, is when we did the forensic audit, if you recall, they had already forgave a big chunk of that. The bond payment they forgave. And they brought it back to us, and they were like, we're leaving that up to the council and your city attorney to determine if that was even the appropriate thing to do. But then that debt had kept accumulating again. From 2008, it was back up to $600,000, close to $700,000 owed.
Well, at this point, it wouldn't affect your bottom line. The bottom line was taken care of when we reported the revenue of the transfer. So the receivable, when there's interfund receivables, they're not separate receivable and liability accounts. They offset each other.
So that's what you're explaining is it's a bucket, and everything goes into a bucket.
Right, but if it's squash money that can only go for capital outlay purchases, how can squash money offset a debt for salaries? Because we didn't get a whole year of our squash in this city. We didn't
So
get any of it.
it's not affecting the calculation in the way that you're thinking, because at the end of the day, it's not paying the debt service. What's happening is you're seeing a receivable decrease on the interfund, but it's on the revenue side, you have SPOS money that came in and a debt payment that was made. I'm not sure how to better explain, except on the balance sheet, it's purely a bucket, and then inside that bucket is the internal tracking behind the bucket. So it looks like an improvement when you look at your net revenues, because there is revenue into the account. That's why I say that there's revenue into the account, there's revenue from utility billings into the account, there's expenses for utility billings in the account. But it is temporary because of that income that then is offset in the balance sheet account. So then when we come, say, next year, you still have money that's owed for those purposes. Nothing changes about
I'm
that.
not recording them anymore, because that's what I couldn't, they've always been reported like what it was each year that we were carrying. And I didn't see what was reported this year, so did it get wiped off the books?
So that's the receivable in total.
Okay, so like, let's say the council voted. The council voted to, should give me a couple minutes. The council voted to, how's it worded? Y'all voted to move the money in order to pay the debt service. You got a check wrote off the splashed account in December. So a check comes off the splashed account for $680-something thousand made payable to the water and sewer fund. Then $100-something thousand comes out of the general fund in a check made payable to the water and sewer fund. Mayor signs those checks off of those two accounts, get paid into that fund like the minutes. But then it's remote transferred and it's all dumped back into the general fund
No,
for
it wasn't
December.
remote,
It says remote access.
it was a remote deposit from here. It was deposited in the wrong account. I did not discover it until February when I was reconciling the bank accounts.
But it was
At this
still
point, if
there.
the council wants to put it back in a different cash account, that's fine. You're gonna set up the liability.
It's already there. So then that's my question. So basically the money's now back in general fund as paying back the money owed to.
That's just cash. As far as how the slots expenditure was calculated, is in the right fund.
But it was to pay debt service, so shouldn't it be in the water fund? Because that was my question. So basically that money offset our debt compliance and it offset the debt owed to the same money.
I was under the impression that when money hits the debt service, that it can't be taken back out of there. It has to stay in there to pay the water and sewer debt that we have.
Correct. There was a transfer. The transfer, though, is purely a function of hitting the wrong account. It didn't belong where it landed to begin with, and so that's what had to take place in order to resolve that.
So that's my question. This ended December 31st. December 31st, that's offsetting like it's our general fund balance. You know, that money was there December 31st when this year closed out. $700,000 was in general fund that was not supposed to be there. In the bank. It was still in the bank in May, June. In the general fund.
I don't recall all of the dates and all of that.
It happened in December after we voted. The cash was deposited into the wrong bank account. But the transactions were reported properly. The SPOS was reported properly. At this point, it's just getting the cash in the right bank account. However, if you do that, then you set back up your $700,000 liability. So that's the council's decision, but it wasn't handled incorrectly. It was reported the way it happened. And if it happened, but in this case, it offset the liability that was already there.
Which was from salaries.
So your proposal is,
I reported it the way it happened in the bank when I discovered it in February. council wants to put it back, that's their decision.
But that's what they, to move it to water. I'm just still trying to figure out, because when y'all voted to use SPLOST money for a bond payment, the whole purpose of that is that the city would lose a year of capital outlay projects, ball fields, lights, services. We didn't get any of our SPLOST money for that year, and it was to make a bond payment, not to pay the water and sewer debt that was owed to the general fund for salaries. That's where I was confused. Because the night we adopted the budget, the capital budget showed the money going out, but the water budget didn't show the money coming back in.
Right.
And I couldn't figure that out. So then when it ended up in general, if you're looking at our general balance that you're starting with in December, end of the year balance, that balance is including almost $700,000 for SPLOST money. It's, there, if you're recording our bank statements at the end of the year is where we ended the year with our general fund revenue. It looks like like I said, to me, we lost a year of that making a bond payment, and it was for, clearly SPLOST money could have been used for debt service. That was questionable because the intent when Mr. Bratton and Mr. Howley, Ms. Howley Miller were at that meeting was it was to help pay down that balloon note. It was to start, that was there as a cushion to be used. And, I was upset they were talking about using it for a bond payment, but then to find out it didn't make a bond payment, but it got dumped back in the general fund, that's even more confusing because we lost a year of capital outlay projects for this city.
So the dumping into the general fund it was a function of the transfers between just human error of hitting the wrong account. At the end of the day, there's money that was paid out of the debt service or out of the water sewer fund that paid debt service. As far as internal tracking of the payroll piece, because that muddies the water as far as the balance sheet account, because it's kind of its own little entity, that's a discussion, as Sarah has said, for the council.
Because
for an accounting perspective.
Well, and here's my question. I'm not happy with the 0.66, and here's why. Because if that $680,000 had made it into the water sewer fund and was in the water and sewer fund in December, our bond compliance would have been higher than that. Don't you think? Because we would have already made a bond payment, we would have ended after having paid all of our operating expenses, and we would have plugged another $600,000 in there. And our bond compliance would it not have raised our bond compliance?
That was a cash
Only
only.
transfers or cash balances.
Yeah, so it's when you're looking at your debt compliance calculation, it's looking at net revenues. So what you're seeing, what's ringing your bells, and I get it, is balance sheet accounts. But the balance sheet accounts don't impact your debt service calculation.
But you
Your
said
debt
that
service
0.66 was better due to the transfer from SPLOST to
Yeah,
that
well, you
account.
got money into that account to pay for debt service that you wouldn't have gotten otherwise.
So you're thinking of the cash portion. We needed the revenue as well. The revenue increased the bottom line of that fund, which is what we were trying to do, because otherwise that fund would have gone in the red.
So for people that, there's cash and then there's accrual basis accounting. So the revenue is reported as of 12/31. The cash makes it to the bank after 12/31. So for the debt compliance piece, that 0.66, it's already been considered in that calculation. That's why you're seeing it, even though the cash didn't follow it until after year end.
So basically, we lost a year of SPLOST money and we claimed back salaries that were owed between the water and sewer fund on paper. And then we're going to leave cash back to offset the debt compliance.
Do you know when the cash came back?
It hasn't come back.
Okay.
But from the accounting side, it was reported the way it happened.
Correct.
See, I get concerned when the council votes to move $622,550 out of SPLOST. That I thought was going into debt service, and then another 130 out of general fund. I thought was going into debt service, and I was under the impression once the money lands in there, that it can't be taken out. It has to be applied to the debt. And so I have to sign these checks. And I
on page 28 of the financials, the schedule at the top of the page is very clear that the accounting for this debt service occurred in the way that it needed to. You see the 130 transfer out of the general fund, and then the 626,267 out of the SPOS fund. The sum of those two is your transfer in to the enterprise fund water sewer.
And then by doing that, though, you come down here and you don't report the debt owed to between the two funds anymore, the way it's been reported.
So your inter-fund receivable, keep in mind, now that's a balance sheet, it is listed on page 4. No, excuse me, wrong. Number 4, but that's incorrect. Give me just a second, let me find that schedule. Okay, so at number 5, actually, the inter-fund receivables payable.
Page 4.
It's 27 of the report, note number 5. So this is the piece that Sarah was talking about, page 27.
It's page 28.
No, actually I'm looking at bottom of page 27. This is where that transfer on paper does eliminate the inter-fund receivables.
So it makes it go away.
It doesn't make it go away.
We went from 700,000 to 74.
Those are your but the transfer is a function of that. So what she's saying is the accounting has happened properly, and then at this point,
But your point is you can't spend the same dollar more than
No,
once.
my point is that's squash money, and this debt is for employee salaries. Squash money can't pay down debt for employee salaries, that's not right.
Was that not a function of the SLOSS one, that was not listed as one?
No, it was a pay down debt service.
And that's what we did.
It was for employee salaries. It wasn't, the debt service was the bond. It was on the ballot to pay down the bond. This has nothing to do with the bond. This is employee salary, the general fund paid for the water fund. And the water fund didn't pay it back. The city had already voted to forgive this debt once. They forgave the debt in 2007 or 2008, and wiped it off, and then it built back up again. And the audit continued to account for the buildup every year. I want to say y'all discussed forgiving it again in 2009, did it, but they had forgave it. If I'm just not mistaken, that was something we were supposed to have addressed. Let's see where it was. It was, the water department should reimburse the general fund for its payroll-related expenses. We, however, did not identify where these transfers happened. According to the 2008 audit, it was up to $725,000, but they went ahead and forgave it back then. And so the forensic audit said we're going to leave it up to the council and the city attorney to determine whether that transaction was in compliance. But that was popped off the books once through a council vote to forgive it. Okay, so my issue is, are we going to get in trouble with SWASH if we are using SWASH money the council voted to pay on debt service, and then instead use it to pay down debt for salaries? And it's reported in the audit.
How much was the, how much did we pay down on the debt?
It was up to close to 700,000 by the time they moved the SWASH money and all back over there. It took it down to 74,000.
No, but what I'm saying is your
The debt payment.
the debt payment for the year.
That money goes 50,000 a month into the debt service account, and then that money is paid directly from the debt service account to the bonding company. A little over 500,000 a year.
Understand, but if you consider a dollar in that enterprise fund is a dollar in that enterprise fund, what, I guess I'm trying to understand.
The
What difference does it make whether it was the SPLOST dollar that got paid to reduce debt or the earnings from the enterprise fund?
Well, the earnings from the enterprise fund could pay back the salaries, but the enterprise fund has about $500,000. If there wasn't enough in the enterprise fund to pay back the debt. So they had to use SPLOST money and offset, and that was the whole thing of the call for this, is the council voted to move it to debt service. The ballot said it could be used for debt service, and instead, the money went into the general fund and paid back the debt to the general fund, and it's still in the general fund.
So I wasn't clear, no way.
Yeah, it's, no, I mean, this happened just now, like this year. So the money that we voted now to pay into debt service went into general fund instead. So it's recorded in here as if it was in the general, in the water fund, but it's actually deposited and still stays sitting in the general fund.
I can tell you is that from an accounting
So it's stands
standpoint, this, it's reported the way it happened. This is when the transfer is reported correctly. Now, as far as the legality, I will leave that to your attorney to make that call.
Are there any other questions on that letter?
We have 3 accounting professionals sitting here, and I suggest that we listen to them rather than listen to Mrs. Ransom. We're paying them the big bucks.
So
So
let me tell you, we will look at it and get you a better, how about I get you a better written explanation of it? Then, because obviously what we're saying is not resonating. So why don't we do that? Get you something that explains that. The bottom line is, yes, it was for debt service. You did pay debt service during the year. So,
And I get that part, I guess something is, it's doing both. It's that it's taking down the debt service, but then it's also sitting in the general fund right now. So the water fund, money's in the general fund, it didn't go to the water fund. It's sitting in our general fund.
correct, but you had a debt back and forth, and this is,
First time it was, yeah. So we basically just watch money in debt service.
I'm satisfied that this accounting firm has E&O insurance that can cover any problems that we might have. And it's, it's their responsibility to do the audit, put the figures where they should be put. So I think we should put our faith in them.
We also have state laws, and state laws says you can't mix SPLOST money into general fund, and I get concerned, sir.
Well, again, they should have E&O insurance now.
Well, there again, I'm having to go and be a part of some stuff that I am not guilty of. Don't like it when it's council folks to do something that should be performed. And, it didn't go into the debt reduction account. That's where I thought it was headed, and I didn't think.
okay, so if you put it, think about it, if you put it in the debt reduction account, and then you use that to pay this all, you're just moving cash, you're just writing 2 checks. Is that what we're saying should have
Well,
happened?
we've taken $51,000 and something a month into the debt service account. And I was under the impression that the only way to get that money out of that debt service is to send it to New York, like a little, on the farm payment and the interest and stuff. And then this council back in 2010 signed a letter of compliance that they was going to keep 1.05 over and above the expenses into this debt service account. Again, we're better than last year at 0.59 at 0.66, but it's not the 0.105 that.
And that's that is my bigger issue. I mean, I will look into the issue that you've raised and get you an answer. And if something needs to be changed, by all means, we will change it. And we appreciate you bringing that up. And we will work with Sarah on that.
The way I see it too, that we have a balloon note $4.6 million with January 1st, 2021. And the way I envision the splash deal would be take that deal up and pay that down on this balloon note and hopefully get the rest of it refinanced at a reduced rate to take some of the burden off of shoulder for these taxpayers. That's just my vision.
The first way you take care of that is getting that percentage closer to what you agreed to have it at when we figure that out.
Council's been doing studies, really, taking care of that. One day, it's going to be a day of reckoning. Continue.
I just finished with the letter, so if you want to.
On the financial statements, let's look through the financials for just a few minutes. From an overall standpoint, there are a couple of numbers that I want you to look at. I kind of like a presentation that you can see year over year. So look at page 6. The financials are presented in multiple formats throughout this document. But if you look on page 6 in the financials, this is a summary of your net position, or your business world, you might call it your balance sheet. But your net position down there at the bottom, the first two columns represent your general fund, your police fund, and your SPLOST fund. Your second two columns there, comparisons, is your water and your sewer fund. So you can see year over year how those balances have fluctuated during the year. You have a funny set of words there that say deferred outflows of resources. In your mind, consider that your pension and your refunding accruals that essentially will be, those are deferrals that will be taken care of over time. The refunding obviously by 2021, and the pension amounts by just by the passage of time. So those relate to the liabilities that you have, the GASB liabilities that you have for your pensions, and that's the offsetting assets for that. But anyway, you can see your total liabilities down there that we're talking about. You can see that in the enterprise fund, which is your water and sewer, your liabilities went down from 6.5 million to 6.1 million during the year. And a big piece of that obviously was the transfer and you can see your internal balances, as was referred to earlier, that went down from 15 to 16 as well. So that you can, to your point, you can see that directly on this comparison year over year. Look at page 7, if you will. This is your change in net position, and once again, it was a fairly uneventful year, if you will, for the most part. Your property taxes and sales taxes came in as expected, and your if you look down 3/4 of the way down the page, your total expenses and your general activities, you were at 2.7 in one year and 2.8 in the current in the next year, and your business type activities, water and sewer fund, if you will, fairly consistent year over year. And if you look over in the far column, you can see the expenses compared to year over year, and see that. Your total change in net position, your governmental fund, if you count up 4 lines from the bottom, it says change in net position before the line that says adoption of GASB 68. You can see In 2015, that number was a positive 692,000. But by the way, you had a transfer going the other direction last year. Just keep that in mind, by $163,000 going from the enterprise fund into the general fund. So do keep that in mind. The positive balance that you see last year of $692,000 change in that position as compared to the deficit change in that position of $305,000 this year. If you hadn't had the large transfer going the other direction this year, that would have been positive this year as well. So your business type activities is the one that is you had the transfer going in. If you did not have that transfer this year, you would have had over $200,000 deficit in that fund. But you guys know that because I've read the minutes and you tracked it throughout the year. So you knew exactly the need for the transfer there. I guess those are kind of the highlights. Really, the only if you dig into the numbers and you look at other items that increased during the year. Let's go back to page. Let's see, page. You really don't have a year-over-year comparison on page 14, but if you go to page 14, I will tell you that another number that did increase this year by well over $100,000 is the third line down there that says fines and forfeitures, and that relates to the just the fines and forfeitures coming from just the traffic activity and the construction zone traffic. So that was a pickup this year that was an increase over the prior year. Really, the other numbers, if you look at this and you had both years side by side, you would say you can almost copy and paste one year over the other. The reason I point that one out, that one, it's very explainable as to why that number is higher this year, and it will not, that will fluctuate with time.
So basically, our revenue didn't increase, but writing tickets is what increased.
Well, I mean, it increased. You had by the way you budgeted.
Right, but I'm saying that as far as where we.
It'd really be hard to budget to that particular number. Correct.
Right.
Yeah. So what I'm saying is, if you dig in here and you say, well, that number's a little bit higher than the budget. Well, I mean, that's explainable.
It's going to be this year too. It'll be this year.
And then the other piece that I'll add in there too is confiscated.
Yeah, well, once again, another thing that you really can't predict and you can't budget year over year. So overall, though, on page 14, you can see the excess. This is the governmental funds. You can see the change in revenues there for the general fund, and then the police asset fund and the capital projects fund. But you had excesses for your total governmental funds of $331,000. So really, you've had no tremendous changes in your level of activity or your operations year over year. You've got a footnote in here that describes some of the capital purchases that you made during the year. Nothing way out there. I mean, you didn't buy any new buildings or anything in the current year. Anything like that. Robin, what other things would you? I guess what you need to know as a council, you have what's called an unqualified or an unmodified audit opinion. which is a good thing. You had some, we did report one material weakness in internal controls, but I will tell you that we did see improvement in that area this year over last year with the work that is being done, and we anticipate seeing more improvement this year as the new system gets fully online and operating the way it should. Internal controls are important. To me, internal controls are pretty simple and easy to explain. The internal control would be that second set of eyes on a transaction, so that it would take two people to make something, you couldn't just have one person here and committing fraud, I guess is what we're saying. Good internal controls is having that second set of eyes on every transaction. So if one person is approving entries and another person is putting those entries into the system, that's a good set of internal controls. If you have one person doing both, somebody else needs to be looking at the input to make sure that things look the way they should. So, we've already talked through the other letter, and I'm sure Robin has already pointed that out. But to me, that making sure you have strong internal controls prevents a lot of issues. And it also makes sure that throughout the year, you know where you're tracking accurately against budget, which is very important for this group to be aware of. Are there other questions about the financial statements? Is this what you were expecting to hear, that you had a good year? When you look at your unrestricted, when you look at your reserves in your unrestricted net position, you guys are in excess of a year of reserves there. That's a good place to be. If you take a poll in the cities right around you, not all of them have that kind of reserve built up. So I mean, that's a good thing to know, that in that general fund that you do have some reserves and some flexibility there. That and you set that aside for good reasons. You don't know what the future holds. You don't know what things may befall you that you have to use that money. And one being making sure that it's refinanced, and whatever it might be. You guys have those kind of reserves, and you need to be aware of it. Do be mindful of the ratio calculation relating to your enterprise fund and the debt service requirements. That by 2021, that will require either using some of those general fund reserves to fund some of that, or through some other means to get the thing either refinanced or whatever. So, good year, strong balance sheet, or statement of net position, or whatever your preferred term is there. Do you have other questions?
I think GMA recommends that we have 3 to 4 months in reserve, so we've got about 3 to 4 times more than what is actually recommended in reserves.
Yeah, the minimum that they recommend is about a fourth of a year. And then you start adding on the unknowns, the potential unknowns that are out there. If you're in Florida and it's likely that you're going to get hit with a hurricane, those kind of unknowns that you might have here, you may have other kind of unknowns based on infrastructure in the city, based on whatever may be coming down.
So bottom line, we're in good shape financially, other than just the debt ratio on the bond.
Yes, and we will get you answers on the SLOSS transfer.
But my question to you, Mayor, if I may, while the general fund has what is their reserves, a lot of our other reserves is actually borrowed money. It's money that's refinanced back in the loan. A lot of our CDs are refinanced back into the loan that we're paying. Every time we make a payment, we're paying on our CDs that are in reserve. It's the water and sewer fund, this enterprise fund, that is a sole-standing fund that's, everything's hinged on with the city, that had y'all not done this transfer back, we would have not even come out okay, and that fund concerns me. And we're not discussing the fact that that fund, when I got here, had almost $1 million in it. It's $500,000 in it now. That fund is what a $5 million debt is tied to. You know, that bond compliance is what we've agreed to set the rates to make, and we're still not doing it. And so when I'm looking at this and knowing that, you know, it's 2020, it's January of 21, whatever plans have to start in 2018 and 19, because it's 2020 that all that actually comes due. And so when I'm looking at squash money going into this account and then sitting in general fund, but the paperwork shows it went over here and it still didn't bring us into compliance, that's concerning. And while the general fund has some reserve in checking, in quote on the checking account, a lot of the CDs for water fund, they're all tied up in that bond payment. And that's what concerns me, is what rates we would have to set at to even be able to bring this one account that's not performing to performance. And how do we go about doing that? By looking at an audit, I just see that we're holding it on by transferring and moving money around, not that it's holding itself at all.
This city's hurricanes is sewer pumps and infrastructure.
It's the infrastructure.
That has been neglected and that continues to break an alarming amount. And we don't seem to have small ones there, major, it seems like. Continue, sir.
You have an unrestricted position in the enterprise fund of $1.1 million. Now, all of that is not liquid. Obviously, you've got 1.5 in cash, but that cash is spoken for, if you will, just for these accounts payable on the current portion of debt and those kind of things. But what I want to point out, you have total, and to your point, you have total operating expenses during the year of $1.6 million. And you have a total reserve of $1.1 million. Still, there were still a lot of cities around that would love to have that kind of ratio. But point well taken.
Anything else, sir? Any more questions?
So it's a motion to accept the resolution, is that what you're looking for? All right, I've got a motion to accept the resolution.
Have a motion, Mr. Pratt, to accept the resolution. Second, Mr. Walton, any discussion? All in favor, signify by saying aye.
Aye.
Any opposed?
Opposed.
Okay, 3 for it and 1 opposed. Okay, that is all we have on the agenda. Do I hear a motion?
Motion to adjourn, since we're going back.
All in favor, signify by saying aye. Aye. Y'all for coming.
Yeah, we do it just.